The following is a presentation of TFNN, live at TFNN, The Money Masters. Now, The Money Masters.
Good day, Money Masters and Treasure Hunters. Welcome to the July 18th, terrific Thursday edition of the Money Masters Show. I'm your host, Steve Rhodes, and I'm grateful for your presence here today. My outcome, as always, is to help you to become a better Money Master and to provide you with tools that empower human potential, because living up to our potential, that is something we must master each and every day. So let's begin with some empowering quotes from some different folks out there, folks that you're familiar with. Let's start with our first one. And you know this to be true. 80% of success, well, it's just showing up. Thanks so much for showing up here. That quote brought to us by Woody Allen out there. Now, I don't know if he actually created it or maybe he took it from somebody, but my sources say it's a quote from Woody Allen. How about this one? Think about who this might be. I'll give you an idea. It's an artist. Every child is an artist. The problem is how to remain an artist once they grow up. Who might have said that? What artist could have said that? You got it right. None other than Pablo Picasso out there. Every child is an artist. The problem is how to remain an artist as we grow up. I hope that you are an artist out there. How about this one? You can never cross the ocean until you have the courage to lose sight of the shore. Brought to us by none other than Christopher Columbus. And we're going to take a look at the markets here. They are moving out into the ocean or trying to get away from the shore. The swing points out here, we'll take a look at them in a moment. But let's finish off with this one here. The two most important days of your life. Think about it. What are the two most important days of your life? Well, how about this? Mark Twain would tell you the two most important days of your life were the day you were born and the day you found out why. Think about that one. Well, let's go check out the markets. Let's go see what they're doing and why. Right now, we've got the Dow is up 72 points. Trading at 15,543. S&P up 7 at 1687. Composite up 3 at 3612. Russell 2000 up 5 points at 1047. Google off a buck. Apple up 3. Microsoft down 5 cents. Intel getting a little kibosh in this morning here off 3%, down 75 cents. Leading the charge the upside. New Skin Enterprises up $4.82 out there. Overstock.com up $4. LinkedIn up 4. IBM up $4. United Health Group up 4. Humana up 3.5. To the downside, Sherwin-Williams off 15 points right now. Amphenol Corp off $7. That is down 8%. Priceline off $6 here, down about 0.7%. Amazon down 5.55, a little bit shy of 2%. Celgene off $5 out there. Regeneron Pharmaceuticals off 3. Our call number is 877-927-6648. IBM out with their earnings after the bell here last night, moving up with some volume behind the move here. 3 million shares. It has taken out a B point, which is, by the way, the swing point from July 8th. That only had 3 million shares, so you're up over that level already. It has completed the 1-to-1 A to B equals CD. Right now, what it's doing is coming into an area here where it had broken down on July 20th. That had 4.5 million shares the day of the breakdown, 8.9. But in only 40 minutes of trading here, up with 3 million shares. So let's take a look at what IBM is doing. Key because of the weighting inside of the S&P 500. I'm sorry, inside the Dow out here. And IBM now, if we just come from the swing point high, a little shooting star as it ran into the resistance area on May 31st, that level 211 and 98 pennies all the way down to the low, most recent low, which was on June 28th, out at 188.40. It's up over the 0.382 retracement level. That says 202.98 is what it may have in store for us. So gapping up, taking out a B point. The B point, a small B point nonetheless, still a B point is July 8th. Only 3 million shares, and that high is 195.78. A to B equals CD. That's been accomplished this morning. It has been accomplished as IBM. Well, let me redraw that out here. Let me widen this up here. It'd be a little bit easier to actually hit the exact numbers out here. There we go. So moving up and hitting the 1 to 1.272, but when you gap up and you're doing it with really, kind of a wide-ranging bar. Remember here, with regard to this bar, you need to go take a look at yesterday's close and start to color that in. So you might take a look at this candle here right now and say, gee, Steve, that doesn't look too impressive to me. If you go color in the dots, you got to always connect the dots here. I'll go ahead and do that for us. And what I do is I'm going to come like this, draw this little pattern like to that right there. We're going to go ahead and color it in our favorite green, Mr. Green Jeans out here. There we go. So there's the green. And if we were to take a look at the candle and have it look like this, well, there we go. I'll just have it look like that. Does that look any different to you than the candle that looks just like that? I say that it does, and so you've got some wide price spread now inside IBM with some volume. The 0.618 level, by the way, that sets up a Gartley sell pattern here. Let's go ahead and color that one in. That's a 1.6. That's a 618 Gartley sell pattern, and that is where IBM is headed to at least. The 2.618 level expansion, that would be of the B to C swing point. That would go ahead and give you the price target of about 203.87. So about 203.87 is likely where IBM is at least headed to in the pattern that it is in right here, right now. Now let's go take a look at the indexes and the ETFs. Let's start off here with the Dow Diamonds. The Diamonds here up and above the 155.14 level. That's May 22nd. So the Diamonds here joining its brothers and sisters in the NDX 100 and in the Russell 2000 inside the IWM as it gets above 155.14. Now there's 12 million shares out there inside the Diamonds. That is a swing point. That is a key swing point. So far today, nearly 2 million shares in 45 minutes of trading. So if it's going to take this out, if this is going to be a Uncle Ben breakout to the moon, Alice and above, the Diamonds will need to stay above 155.14, do it with more than 13 million shares. If, in fact, they do that, then that sets up probably a butterfly pattern here. Let's go figure out what that is. That would actually be a 1.272 expansion to about the 157.85 level. But what we have going on here right now is a test of that swing point, but in the early stages here on a beautiful summer day, Thursday on July 18th, you do have that area being attacked with some volume. So key will be if it closes back below 155.14, does it on less than 13 million shares, you'll have a failure here inside the Diamonds on price and volume. You come into it with anywhere near 13 million shares, whether you close in it or under it, then you are coming into a swing point with volume. And if you close over it with volume, that sets up a move higher. That's on the Diamonds. If we go take a look at the actual index out here, the Dow index, that is taking on and is trading just above that swing point for May 22nd, which is 15,542.40. It's trading right now at 15,549.32. So on the actual index, you're going to be paying attention to the number of 15,542.40 out here. Let's go check out its brother and sister, its cousin, the S&P 500. It now also over its May 22nd swing point. So we got harmony. The question is going to be, what's the volume? That was 1687.18. Right now trading at 1689.02. It is, if I take a look at the relative strength indicator, still has a little bit of room before it gets into that extreme overbought condition out here. Let's go look at the SPYs, see what the SPYs are doing here in the marketplace. So today's going to be a pretty important day here because it's going to release information to us, that needed information to understand the next move in the markets. Now, the SPYs here have not been able to tag that high. They will. The May 22nd high is 169.07. So far, intra-session, the SPYs have gotten up to 168.89. 16 million shares coming into that May 22nd level of 243 million shares. I'm afraid the SPYs are not going to have the volume. Nah, they're going to be 50% short or more. So the SPYs are not going to have the volume as it takes on its swing point out here from May 22nd out here. Let's go take a look at the other ETFs. Let's go see what the Qs and the IWM are doing here. The Qs here right now, kind of a inside day, trading out at 75.59. Of course, they made it up over May 22nd here a while ago, 4 or 5 days ago, July 12th. 31 million shares got up and above 59 million shares. That area has not been tested. Support now is going to be May 22nd in a high-volume area, which is 74.95. Until that area gets tested, we won't really have a release of information. You can see on the relative strength indicator, if you're watching us on Tiger TV, what the Qs have done. They've worked themselves up into the overbought territory. So that means that price needs to be worked off, and it can be done by either traveling sideways, which it's doing, quite frankly, right now, or it can actually go ahead and pull back. And pulling back means testing that 74.95 area before it gives us its next piece of information. The IWM, as we take a look at the IWM, trading up towards the top of its range right now today at 104.20. It is trying to complete a couple of different potential patterns out here. It's got a 1.618 butterfly at 104.50. It's trading at 104.20 right now. At 105.05 is a A to B equals CD. So that's the range that it is traveling in, and it wants to attempt to at least complete. Volume today, 5.6 million shares. Again, everything is going out after the May 22nd high. It's above that dismal at 68 million shares. It has not even been close. Not even a cigar, not even a chocolate wrapped cigar out there. And so 105.15 is really its next target out here, and the bears just simply are not showing up in the market. They're just sitting there in the weeds. Right now, the Dow is up 77. The S&P is up 8. Let's go to Brent in Martinez, California. Brent, thanks for calling. Thanks for holding. How are you today?
Good morning to you, Steve.
Now, Brent, were you the one that was asking me about Amazon? Did we take a look at Amazon the other day?
Yes, we did.
Okay, so you were looking at that from a short, and that's trading off a little bit this morning here. It's down about $4 and change. I know that's not what you called about, but I did try to cover that during the first hour out there. Did you catch that? Did you catch that review?
Oh, of course I did, Steve.
Oh, okay, all right. Oh, my apologies. Thank you so much for doing that. So I hope that helps you out with regard to the trade that you're thinking about doing there. But today you wanted to take a look at Celgene out here, CELG. Tell us what you're doing and how I can be of assistance to you.
It looked like it might be an island reversal today off the top, so I wanted to see what you thought about that.
Absolutely. Okay. So CELG is the ticker symbol. Let me just update my chart, make sure I've got everything. So today doesn't qualify as a island reversal, I don't believe, from the standpoint of this. So what we want to do, Brent, is we want to take a look at the trading session here of July 16th, and the high there was 135.50, and the low yesterday was 135.02. So there's no space in between those two candles out there. You did gap down this morning. Now, that doesn't mean that an island reversal couldn't set up here, but it would have to take place tomorrow. What we do have inside Celgene, and maybe this is what you're looking at more so, is the July 10th gap. And July 10th, folks, if you are not watching us on Tiger TV, this equity got up to a high of 125.28, and the very next session gaps up, does it with wide price spread, accelerated volumes. That's a good sign out there. And the low of that session was 131.67, so you have quite a wide gap out here. If tomorrow, let's assume that, Brent, today's low is going to be 130.50. Can you hold on through the break?
Sure.
Okay, we come back. We're going to go back out to Martinez, California, to Brent. We're going to take a look at Celgene, and we're going to take a look at island reversal patterns. Then what I'm also going to do, I'll pull up the Qs. I believe the Qs have an island reversal bottom, and we'll take a look at that. We'll be right back.
With over 3 decades of commodity trading experience, Andy Hecht has developed a system that combines both technicals and fundamentals. He calls this approach Technomental, and now you can put it to work for yourself with his brand new service, the Technomental Commodity Report. In this weekly newsletter, which comes out each Thursday morning, Andy gives you his analysis of the market price direction bias using fundamentals, and then specific trade recommendations including entry and exit points using technicals. The recommendations in the newsletter are always based on stocks and ETFs, so a futures account is not required, and Andy will often use options in the recommendations as well. Andy will tell you where to get in, where to get out, and he'll outline the risk-reward profile for all recommendations. To get your month-long free trial to the Technomental Commodity Report by Andy Hecht while locking in the low introductory rate, visit the front page of TFNN.com today.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces, and over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX.
Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow up 92 points right now. S&P up 10. Composite up 10. Russell 2000 up 7. And we're going back out to Martinez, California, to our man Brent. We're taking a look at Celgene. CELG is the ticker symbol, and the question was whether or not Celgene, had formed a island reversal candle. So the key here, Brent, is that you want to make sure that you've got a gap in between the. Let's take a look at what would be required in order for an island reversal to form here. And it wasn't today's candle, just simply because there was no gap in between July 17th and July 16th out there. But was that the island that you were taking a look at?
No, I guess there was, like you're saying, I'm not looking at the chart right now, but there wasn't the gap between yesterday and today.
Yes. Now, what could happen if this equity were to actually go ahead and break down tomorrow? So let's assume that today's low, 130.22, ends up being the low of the session, and tomorrow it gaps down for whatever reason below 130.22. It never hits 130.22. That would create a week-long island reversal because of the gap up that it had on July 11th, last Friday, I believe. Now, I don't expect that that's what we'll see out here inside Celgene because of that gap up was on 6 million shares. It's not out of the question, and you should keep it on your watch list for sure because it is the most bearish of reversal patterns out there, either at a top or at a bottom. And Celgene has made island reversal patterns. It made an island reversal bottom. I was going to try to show you one so that you could notate that on your chart. And it just so happens there is one here, and it was the bottom that came in on Celgene here back in the time frame. I'm going to look at the time frame going back. I'll blow it up on my screen. Let me just move this out here. That way, if you want to watch the archive on this. And in this case here, Celgene, folks, on June 20th closed out at 67.16, and in the very next trading session, big volume to the downside, 23 million shares. To give you an idea, the day before did 2.8 million shares, so 10 times the volume. Big bar standing out there. And then on the next session, moves a bit higher, does it with 7.8 million shares, gets up to a high out there of 61.71. The very next trading session, only 61.51. But after that trading session on June 25th, on June 26th out there, the low was 61.79, and that left a little bit of a gap between 61.71 and 61.79. And even with that high volume low, the reward to risk said go ahead and take the trade, because when those are significant reversal patterns in the marketplace, take a look at that. That actually put in the most recent low out here, certainly with volume. If price ever does fall back, that's where it would fall back to. But I don't see that happening as we speak here right now. And that was the low that was put in on June 21st out there at the $58 mark, and right now it's trading at $132. So these patterns, when you see those island reversal, folks, you want to go ahead and take those trades. They are great trades out here, and that, I'm sure, is why Brent is paying attention to Celgene here on the upside, because if it does break down and it gaps down and creates that island, then yeah, that would be a reversal signal. In this case here, the first place where it would likely travel to would be January 8th of 2013. But until it does that, the stock chart actually looks pretty good. No institutional selling or anything like that off of this one. I hope that, does that help you out?
It does very much, Steve. I appreciate it. Have a nice day, huh? And I'll talk to you soon.
You bet. Thanks so much for calling. That was Brent in Martinez, California, and I'm just going to go back and take a look at that because he was the one that had called, taking a look at shorting Amazon out here. So I want to take a look at that Amazon chart, just see where we're at now. We only took a look at it right as it began trading out here. And Amazon, as I was really pointing out, in the case of Amazon, now the reason that Brent was looking at it was because of the pattern completion with regard to expansions of swing points. And it created a butterfly, 1.618 butterfly pattern, and most certainly did that on the trading session, even when he called in on July 16th out there. Made a little doji candle, moved a little bit higher that next trading session today. It's moved lower out here. But number one, as I had mentioned to him, got to be careful because of the C to D leg on this thing. Very strong, much stronger than the A to B leg here. And the B point, I believe, was crossed with volume at 2.8 million shares, and it was crossed with 3 million shares. So you got a confirmed A to B equals CD. Now, A to B equals CD, folks, does not mean that it just has to be 1-to-1. In fact, a 1-to-1 A to B equals CD only completes 60% of the time. The other 40% of the time, it completes something else. That's where I teach you the different patterns out there and how to recognize when that is likely going to be the outcome. And in the case right now of Amazon, even though it's trading lower here today, I believe that is what its outcome is. It actually wants to move higher, in this case here, more likely into about the 313-ish level out there. And until it deals with this bar out here, and that's the bar of July 12th. That's not the bar you go to, to have a nice drink. This is the Amazon bar out here. Until it deals with that bar, it still wants higher price. Right now, we got the Dow up 96. S&P is up 11. We'll be right back, folks.
With the stock market flirting with all-time highs and volatility back, now is the perfect time for a 2-week free trial to Market Insights. On Monday, June 24th, Tom O'Brien closed out all 5 open positions in his daily newsletter, Market Insights, with all trades being profitable and ranging from a 2.23% gain all the way to more than an 11% gain in just one position for an incredible 32.7% profit combined between the 5 trades. Let Tom O'Brien's years of market experience work for you. If you'd like to see for yourself what kind of trading newsletter Tom O'Brien delivers to his clients each morning, then now is a perfect time to sign up for a 2-week free trial to his daily newsletter, Market Insights. In a volatile market like we currently have, the potential for fast market moves like we've seen recently is a trader's dream. So don't wait any longer. Sign up for your 2-week free trial to Market Insights today at the front page of TFNN.com.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at Nadex.com. That's Nadex.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back to the Money Masters Show, folks. Right now we got the Dow up 96, S&P is up 11, Composites up 10, Russell 2000 up 8. Let me check here on the New York Stock Exchange. That's up 70 points. That is actually the leader in the clubhouse. Just got nosed out here by the NDX 100, which is up, no, I take that back, by the Russell 2000, which is up 0.8%. And the New York Stock Exchange up a little over 0.7%. But wide market breadth today, 1,495. Net advancing issues as we speak here at the moment, so not too bad. Now, in the case of the ES Mini, I want to just take a look at the 30-minute chart out here, the real EKG of the system, and it's in the extreme. I mean extreme, folks, overbought condition out here. And this needs to be worked off. Now, it can be worked off by traveling sideways. It can be worked off by pulling back. And the key area here right now is going to be the level that it broke out of, which was the 1679.50. So you're at 1686.75 as we speak right now. But it should start. We should start to see things taper off and start moving off sideways out here. Just simply because of the extreme condition that it has gotten itself into. Let's take a look at some of the currency pairs going on inside the marketplace right now. Let's take a look here. We've got the Euro Japanese yen, the key currency pair for us to be paying attention to. It's getting ready to complete a 0.786 Gartley sell pattern. The Euro Japanese yen is the currency pair that tracks the U.S. stock market better than anything everything else out here, and it is the fuel for the engine of the markets. I can't tell you why. I only know that it does. And so this thing here, it's up towards its session highs. Still has a bit higher to go, but now this pattern can complete when the markets are closed out there. Just because it gets to the target area of 131.95 does not mean that that's the time when it will reverse out here. That's just simply the next pattern. That's where it should find some resistance, and you'll only know if you see the actual bears show up in the marketplace here. Otherwise, it can actually go ahead and make a 100% move of a move, because at that point, 786 retracement level, at that point, 786 Gartley sell pattern, it also would be testing the May 22nd swing point. The low of that is 131.94, and you know when you close inside a swing point, doesn't matter whether it's currency, whether it's a commodity, whether it's an ETF, whether it's a 10-minute, a 30-minute, a one-day, a weekly chart, when you close inside a swing point, regardless of volume, it says it can go up and it can test the top of that. So this will be key here as we take a look at the Euro-Japanese yen currency pair. Let's take a look at the pound. Let's see what the pound is doing. That ran down into its support level, that little hammer candle out there. Let's pull this back. We've got a couple different patterns out here. I need to update the screen here, so that'll take just a moment to do that. As it's doing that, it came down. The pound itself came back and tested the March 12th, 2013 hammer candle, that low 148.30. That level held. That is a strong area of support now. The pound is up above the 0.382 retracement of its move down off of June 17th out there. When you get above a 0.382 retracement, it says it can go up to the next floor. I suspect that's what the pound actually wants to do, which is get up into the 154 area, maybe 155, where it would complete a nice 0.786 Gartley sell pattern out there. So the Great British Pound, no bearish signs out here, at least on the daily chart. It's neither overbought nor oversold and has room to run to the upside. If we go take a look at the Queen, the euro out here, the euro traveling really sideways, traveling with inside this little wide-ranging bar here on July 16th out there. Therefore, it has made the 0.618 retracement. That's just simply coming off of the same area, June 19th's high, to the low that was put in on July 9th. When you make a 0.618 retracement, what happens? You let people off of the elevator, and that is, in fact, what the euro here has done. So long as the euro travels with inside this bar, the bar from July 16th, it has not given us, in my opinion, has not given us a sell signal, has not given us our next sell pattern out there, at least on the daily chart. Neither overbought nor oversold, so it does have room to run to the upside. Let's go take a look at the Japanese yen with the Japanese yen, U.S. dollar Japanese yen currency pair. Let's go see what it is doing. And Ixnay to the pattern that I had originally drawn in here was looking like maybe it might make a Gartley buy pattern. Actually, it's still in place, so I take that back, but it's starting to wane just a little bit here. Right now, you got the Japanese yen, after making only a 0.382 retracement, coming off of the low here from June 13th. That low was 93.77, all the way up to the high that was put in on July 8th at 101.52. If, in fact, this pattern here that I've got drawn in, the 0.618 Gartley buy pattern does not form, this is going to be a heck of a move to the north side, because it's only a 0.382 retracement. And what that would do, I'll go ahead and take this off here, that would set up an A to B equals C to up that would look like this. So let's take a look at that. That would take you into the 105.94. Now, let's see. If that pattern sets up, it looks like it would be a butterfly pattern that it would be forming. See how we can draw these patterns here in advance? So there's really two competing patterns that are in place here. And I can't tell you which one it's going to take, but we can take a look at both patterns here. So if, in fact, the low was put in 4 or 5 days ago, what the U.S. dollar Japanese yen ought to do is go ahead and complete this pattern, which is your 1.272 butterfly sell pattern, which will take you up into the 106 type range. But right now, for me, a little bit too close to call which of those patterns it is trying to complete. Let's go over and take a look at an intraday chart and see what it, in fact, is doing out here as we take a look at the U.S. dollar Japanese yen. So it has moved. It has worked its way up into, let me just refresh the chart and make sure. It looks like it's moved up into a overbought condition, and so it's going to need to work that off as well. Just like the ES Mini, it's got to just travel sideways or move back. It's just gotten a little bit too overbought. And it's just taking a little bit too long here for this chart to finish. Yeah, so it is in the overbought territory. It has gotten above this swing point on the 30-minute chart from 8:30 in the morning on July 15th. So that looks to me like what this is suggesting is it really wants to finish an A to B equals CD up on the 30-minute chart. That A to B equals CD up would take us into the price level of 101.11 out here. So 101.11, it looks like that is the target right now, and that's going to be a 0.786 Gartley sell pattern, a little bit above that, because 100.81 would actually be the 0.786 area. So 100.81 to 101.11, that is really the range now for the U.S. dollar, Japanese yen. That's what it actually wants to do out there. Let's take a look at what's going on around the world here. As long as we're talking about the Japanese yen, let's go take a look at the Nikkei. It closed higher last night. Its competing pattern out here is a 0.618, a 0.618 Gartley sell pattern. But that has been thrown out, and now what we can see here is that that key reversal session here did not hold. Now what the... Oh, that was smart. Let's pull this back up here. Now... What the Nikkei is, it's on its way up to 15,187. That'll form a 0.786 Gartley sell pattern in the marketplace, and that will look like about this. So it moved up, and it moved up above the 14,595 level. I don't have volume, but the bar out there is telling me that it actually wants to get up to 15,187. That's on the Nikkei. Let's go take a look here at the FTSE, see what it is doing. It is also taking out its 0.618 Gartley sell pattern. Of course, the bears never showed up here. That's why you never would have taken a trade on this pattern here. And now it's moving up to its next level, 66.94. That's after a 10% move off of its high. Let's take a look at the DAX out here, DAX in Germany. Also now with conviction taking out its 0.618 Gartley sell pattern. 83.64 is its move. That's a 0.786 retracement. But quite frankly, if it finishes a session like this or up towards its high, it's coming in there with a wide-ranging bar. You know what that says? That says that the DAX is feeling a little lonely, and it wants to go join the S&P and the Dow and the rest of all of our brothers and sisters here in the U.S. by getting back to the May 22nd level, and it's got its work cut out to do that. That's going to be up at the 85.57. It's traded at 83.24 right now. But 83.64, that looks like to be on the horizon for the DAX. If I take a look at what's moving and grooving in the marketplace, to the downside here, inside the NDX 100, leading things to the downside is eBay. You've got eBay, Intel, Celgene, Tesla, Maxim Integration, and Yahoo. Yahoo had a big day yesterday. To the upside here, inside the NASDAQ, putting the juice into it, is Xilinx, Checkpoint Software, Altera Corp, Fossil Group, Dell, Activision, Cognizant Technologies, Mylan, Viacom. That's what's putting some energy into it. Inside the Dow here, moving things to the upside, is United Health, Bank of America, IBM, Cisco, J.P. Morgan. To the downside here, we've got Intel, American Express, Verizon, and Merck. Inside the S&P 500, to the upside, Johnson Controls, SLM Corporation, Xilinx, United Health, Peabody Energy, Morgan Stanley, Safeway. To the downside, and it's not a ton to the downside here inside the S&P 500. Sherwin-Williams, that's I believe that was a buyout, not a buyout, they bought a company out there. Amphenol, eBay, Intel, Celgene, JCPenney having a tough morning. That's taking it out of the S&P 500. Inside the New York Stock Exchange, Spirit Realty, they went ahead and consummated a merger, so that's why that is traded now 47%. Fairchild Semiconductor, Sherwin-Williams, Taiwan Semiconductor, that's taking a little juice out of the New York Stock Exchange. To the upside here would be give me a second here, I shouldn't have hit that button. Super Value, SVU, is the leader inside the New York Stock Exchange out there. DQ New Energy, DQ, not the Dairy Queen, but DQ, AG&E Marine, and Myers Industries. That's what's putting some juice into the New York Stock Exchange. Since we don't look at those equities, let's actually go do that. Give me a moment here. Let me just close all this stuff. I'm not going to save these charts, but let's actually go take a look at one of them. Super Value, SVU, is the ticker symbol here, making its debut at TFNN, gapping up here this morning, doing it with some decent volume. behind this move for this equity. 9 million shares here today, taking out at swing point that only had 4 million shares. So let me see if give me a moment. Let me switch over to a different tab here. Let me see if I can find any news behind SVU, Super Value. See if they were out with some numbers here. Looks like they were out with numbers. Net sales, $5 billion versus 5, so about par there. Earnings per share, 34 versus 19 cents. Net income, 85 versus 41. So a good job of managing their bottom line for sure. Super Value here today looks like this thing. Where is this going to head to? Let's put this on a longer-term chart out here. Weekly chart on Super Value. Oh, that doesn't look so hot, does it? Super Value here, folks, at one point made a high of $49.78. Having a nice day today, but it's having a nice day at $7.91 out there. It had some decent volume here at the bottom, at the low on July 13th, but it's up and over that level. So on the weekly chart, let's see, it looks like it's taken out a B point with 35 million shares was May 17th, and let's see, it's done 15 million shares through yesterday. So volume-wise, I'd have to go back and let's assume that it does take out its B point with some volume. That would actually set this up for a nice run to about $11.19 out here. I'd have to do a lot more work before I would actually go ahead and take that trade. And that is on Super Value. But let's take a look at DQ New Energy. DQ is the ticker symbol, not being disqualified here this morning as it is moving up, putting some juice into the New York Stock Exchange here, trading out right now at $10.98. Let's take a look at the volume behind this move as it tries to take out swing points. 99,000 shares, so not a liquid stock by any means, but it does have a high volume high out here, and that is from the trading session of January 24th. So this equity actually wants to get back to the 1670, 1321 level, and that is DQ out here. Take a look at this equity. Take a look at buying breakouts. This equity here broke out on December 12. That was a great concert out there that they put together for all the Sandy victims. On 12/12/12, this decided to break out with 93,000 shares. Makes a big, huge run-up. Does it with some volume, so that is a good sign, in essence, for this equity, and pulls all the way back down. That was after making a high out there with about $16.70 with 234,000 shares. But as it pulled back on lighter volume. And it pulled back where to? All the way to the breakout. The low on April 23rd out here, $4.02. The low of the breakout, $4. You've got to love that. That breakout session was 93,000 shares. When it made that low on May 23rd out here, 53,000 shares. So that would be buying a breakout. That was a nice looking chart out here. And this had volume here on the trading session of May 20th. Had 330,000 shares out there, so not too shabby. But that, you can use this one. Don't go buy this. Don't go rush out to buy this. But this is a nice way to take a look at a breakout and how you want to buy a breakout. So I have a request I see over on another screen here to go take a look at natural gas. Let's go take a look at natural gas. As long as we were talking about Hurricane Sandy and Coney Island, I suppose it only makes sense to look at gas if you eat too many Coney Islands. Can you imagine that guy, what's his name, Chestnut or something like that? How many hot dogs did that guy eat? And how much times? I don't remember, like 70 hot dogs or so. That's got to give you some gas, don't you think? Well, we're going to come back and we'll come back from this break. We're going to take a look at natural gas because it's moving and grooving this morning back inside the rising price channel, doing it with a wide-ranging bar here. When we get back, we'll go take a look at natural gas. Be right back, folks.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try patterns, profits, and peace of mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's patterns, profits, and peace of mind.
And get the edge you've been looking for.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of TFNN.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Nowhere, spelled N-O-W-H-E-R-E. At one point, we've all been there, whether it be our health, career, or our finances. Some might be there right now. So where are you when it comes to your trading and investing? Better yet, where would you like to be? The good news, I can take you from nowhere to now here right now. Same letters, N-O-W-H-E-R-E, just a totally different emphasis and focus. Hi, I'm Steve Rhodes with TFNN, and on July 25th at 6:30 p.m., I'm going to share with you a trading strategy that I began on May 10th when the S&P was at 1627 and closed at the same price 8 weeks later. That's right, the S&P went nowhere versus a trading strategy that produced 100% hypothetical return in that same period of time, and it's now here for you. Subscribers to my daily newsletter service, Mastering Probability, have free access to this exciting live workshop. The trend is your friend. All the details are on the homepage of TFNN.com. Decisions shape your destiny, and your trading destiny is now here for you.
Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
Welcome back, folks. The Dow up 112 right now at 15,582. S&P up 11 at 1692. Composite up 14 at 36.23. And we're going to go take a look at the natural gas, a continuous contract here, having a nice showing today for sure. Trading out at $3.78 out here. And it had looked like this was going to move down for some lower price out here. It broke the rising price channel, but it is back inside and actually looks pretty decent here. And I wanted to see it actually get above and close above this bar right here, which was the bar from June 27th, and the high there, $3.75. You're at $3.78 right now. So it looks to be doing that. Volume behind the move, not too bad, 84,000 contracts. So it looks like it may, in fact, be off of the bottom. Let's go take a look at the actual UNG and how would one set up oh, my goodness, take a look at that 30-minute chart. So it must have been some type of report that was out that was favorable to natural gas, because on the 30-minute chart, take a look at this thing, a real spike up here, all within the last 30 minutes. And on the 30-minute chart, it's moved into the extreme overbought condition. So go ahead and let this thing back off. Last time, maybe here's where another report came out at 6 o'clock. I don't think it was 6 o'clock in the morning on July 10th out there, but we're just taking a look at it on the 30-minute chart. Last time it got into that extreme overbought territory, it most certainly went ahead and pulled back. So wait for this to pull back because of the extreme condition that it got into. Now, in this case here, you've got some real volume behind the move. So this one is real to the upside here, and I would say, okay, now you start taking a look at where do you get in on the UNG, or how do you actually trade that if that's what you're looking at. So as we take a look at the UNG here, and you really have to trade this off of the actual contract itself. Let me just go ahead and delete everything and start from scratch out here. So you'd have to put a stop inside the UNG. You'd have to do it below your swing point of $18.69. You're at $20.03 right now. And what you're gunning for is probably the low of this bar here on May 2nd, this high volume bar, which is 21.73. So you've got to do the reward to risk on this equity to make sure that it makes a lot of sense, because you're at 20.04 right now, and realistically your stop should be underneath that swing point low of 18.69. So that's over $1. Let's say $1.25, and you're at 20.04, and where you're going to run into some resistances at the 22 level. So I don't know if the reward to risk makes the sense, Terry, but that's what buying it on a pullback, that would be a little bit different a scene out there. That would give you maybe a better reward to risk trade. Inside UNG at this early stage, some good volume, most certainly 4.6 million shares, and it's coming into this, getting over this downdraft day from June 27th. Which would be 12 million shares, and the top of that is 1976. Maybe your entry into this would be right around 1976 or so, and see if that works for you as far as the reward to risk. So let's take a look at today and what it is that we are looking at. I'm going to go over to the ETFs because that's a little bit easier for you to follow. Right now, as we take a look at, you've got the IWM, that's completing the 1 to 1.618 and the A to B equals CD pattern out there, but up at the top of its trading session. The key here today is going to be the SPY and the Diamond. The SPY's now up and over 169.07. That's the number to pay attention to. 243 million shares. Not a chance that it's going to do that today. 30 million shares already. So it's going to be light in the loafers, but you get it close above 169.07, and the drift higher most certainly could be in place. The Diamonds here, the Diamonds are up above the 155.14. That's May 22nd, and the Diamonds are doing it with volume. 3 million shares going against 12.7. The Diamonds actually could do it on volume. Folks, stay tuned. I believe Basil Chapman is going to be up next. Have a terrific Thursday. Larry Pesavento following Basil, and I look forward to seeing you in the morning. Take care, folks.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to try out Basil Chapman's newsletter, The Opening Call, then visit the front page at TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday, 11 a.m. Eastern, on TFNN.